There is a crucial update that every Social Security recipient needs to be aware of right now. A new Social Security rule is set to take effect on February 10th. While it may seem like a routine administrative adjustment, officials warn that even minor mistakes could result in payment delays for some beneficiaries. For millions of older Americans who rely on their monthly checks to cover housing, groceries, medications, and everyday expenses, a short delay can create significant stress. Understanding what is changing, why it matters, and how to avoid potential issues has never been more essential. Social Security represents more than just a government program. For many retirees, it is the culmination of decades of hard work, returning in the form of financial security. After years spent building careers, raising families, paying taxes, and contributing to the system, these benefits often become the cornerstone of retirement income. When anything threatens the timing of these payments, concern is natural. The encouraging news is that most delays can be avoided simply by staying informed and ensuring your personal information is accurate and up to date. The February 10th rule is part of a broader effort to strengthen payment accuracy, enhance fraud protection, and modernize the way the system verifies beneficiary information. Over recent years, federal agencies have faced mounting pressure to reduce improper payments and protect seniors from identity theft. Criminal schemes targeting retirees have grown more sophisticated, and officials believe stronger verification measures can help safeguard these benefits. However, increased security also makes the system more sensitive to inconsistencies. Outdated banking details, unreported address changes, mismatched personal records, or incomplete documentation could trigger a temporary hold while the matter is reviewed. These safeguards are not intended to punish beneficiaries but to ensure that payments reach the correct recipients. Predictability is critical for seniors living on a fixed income. Knowing exactly when a deposit will arrive allows households to plan bills with confidence. Rent or mortgage payments follow strict schedules, prescriptions cannot wait, and utility companies rarely grant leniency. This is why even the potential for a delay deserves attention now rather than later. It is also important to note that this rule does not mean payments are being reduced or revoked. The emphasis is on verification and processing standards, not benefit cuts. Most recipients who already have accurate records on file are unlikely to experience any disruption. The objective is prevention, not restriction. Many issues in the past have stemmed not from major violations but from small oversights. Beneficiaries may forget to report a bank account change after switching institutions, relocate closer to family and assume mail forwarding is sufficient, or survivors receiving benefits may not realize certain updates must be reported promptly. Automated systems performing routine checks can flag these discrepancies, causing temporary holds. February is often a financially sensitive month for many retirees. Post-holiday expenses, lingering credit card balances, high heating bills, and the start of new insurance cycles can make a delayed payment particularly stressful. Preparing now can prevent unnecessary complications later. Behind the scenes, the Social Security Administration has been modernizing its infrastructure. Much of the system that distributes benefits was designed decades ago, long before current digital security standards existed. Gradual improvements have been made, but the agency continues refining how it confirms identities and processes transactions. A major factor driving these updates is the rise in financial fraud targeting older adults. Scammers frequently attempt to redirect deposits, impersonate beneficiaries, or manipulate account details. Strengthening verification protects payments that retirees rely on. Demographic shifts are also placing new demands on the program. Thousands of Americans reach retirement age each day, and as enrollment grows, maintaining accuracy becomes more complex. Even minor errors can affect a large number of people when millions of payments are issued monthly. The February 10th rule should be understood within this broader context. It is part of a long-term effort to create a safer, more reliable payment environment for current and future retirees. Many seniors remember when benefit checks arrived by mail. Waiting for the postal carrier was once a monthly ritual. Today, direct deposit has largely replaced paper checks, providing faster and more dependable access to funds. However, electronic systems require precise information to function correctly. A single incorrect digit in an account number can cause a transfer to fail, making accuracy more important than ever. When payment delays do occur, they are usually temporary. Once discrepancies are resolved, benefits are typically released. The waiting period, however, is what causes anxiety for households that rely heavily on each deposit. Financial advisors often recommend maintaining a small emergency cushion, but many retirees operate on tight budgets with little room for disruption. Prevention is far more valuable than reaction. Understanding the process behind Social Security payments clarifies why verification steps are necessary. Each month, payment files are prepared in advance, and information is cross-checked across multiple systems to confirm eligibility and ensure funds are correctly directed. If inconsistencies arise, automated safeguards may pause the transaction until reviewed. Technology allows agencies to detect irregularities faster than ever, which benefits the system overall but can catch beneficiaries by surprise. Most recipients will not encounter issues. Those who have not recently changed banks, moved, or updated personal information are typically at lower risk. Nevertheless, reviewing your records before the rule takes effect is one of the most effective steps you can take. Awareness also counters misinformation, which spreads quickly when terms like new rule and Social Security appear together. Rumors about benefit cuts or sweeping eligibility changes are common, but often inaccurate. Staying informed with verified updates prevents unnecessary worry. Social Security remains one of the most stable federal programs in terms of monthly distribution. Payments have continued through economic downturns, government shutdowns, and national emergencies. Administrative updates are part of routine maintenance, intended to strengthen the system rather than weaken it. For those approaching retirement, staying organized is key. Keeping personal records accessible, monitoring financial accounts, and reviewing official correspondence promptly can reduce complications. Families assisting older relatives with finances may find it helpful to review records together, providing reassurance that nothing has been overlooked. Payment reliability also has a psychological component. Consistency builds confidence. When deposits arrive as expected, retirees can focus on life rather than worrying about finances. Safeguarding that stability is why agencies invest in stronger verification measures. Past transitions have occasionally caused short-term confusion, but they ultimately contributed to smoother operations and greater reliability over time. As February 10th approaches, preparation is more important than panic. Knowing what is happening allows calm action rather than reactive stress. Social Security is not static. It evolves in response to economic conditions, technological progress, and demographic shifts. Adjustments are inevitable when serving tens of millions of Americans. This rule exemplifies a proactive approach to protection, preventing fraud before it occurs. Improved verification also reduces administrative errors that can lead to overpayments or underpayments, simplifying corrections and benefiting everyone involved. For retirees who value independence, uninterrupted access to benefits supports dignity and self-reliance. Few things are more unsettling than uncertainty about income, especially after decades of disciplined work. Ensuring dependable payments is therefore about more than money. It is about preserving quality of life. The financial landscape has changed rapidly, with digital banking, mobile alerts, and electronic records transforming interactions with money. While convenient, these tools demand vigilance. Monitoring accounts can help detect irregularities early, and treating Social Security accounts with attention akin to major financial assets is prudent for those who rely on them. This rule may also pave the way for additional modernization efforts. Government agencies continue exploring ways to streamline services while strengthening security. Change may feel uncomfortable initially, but often leads to a more resilient system. Awareness remains the most important takeaway. Knowing a verification-focused rule is beginning allows beneficiaries to double-check information and move forward confidently. Retirement should be a season defined by stability rather than uncertainty. Administrative updates are part of maintaining that stability, ensuring they remain minor adjustments rather than major disruptions. Social Security exists to provide dependable support after a lifetime of contribution. Protecting that promise requires both institutional oversight and individual attentiveness. When both parties cooperate, the system can serve generations effectively. Staying informed is one of the most valuable financial habits in retirement. A few moments spent reviewing information today can prevent significant stress tomorrow. The reality is reassuring. The vast majority of beneficiaries will continue receiving their payments as expected. With preparation and awareness, you can remain in that majority and approach the coming months with confidence and peace of mind. Predictability is one of the most valuable assets in retirement. Unlike earlier stages of life when income fluctuates, retirement planning often relies on steady resources. Social Security forms the backbone of that stability, making its protection a shared priority. Looking beyond February, this rule may be one step in an ongoing modernization of public benefit systems. Governments are investing in stronger digital infrastructure to reduce fraud and improve service delivery. While adjustments may feel unsettling at first, they often indicate progress toward a safer, more reliable environment. Recent years have highlighted the importance of adaptability. Economic conditions, prices, and technologies have shifted, yet Social Security continues providing monthly payments. That continuity reassures beneficiaries that the foundation remains dependable even as procedures evolve. Support channels remain available for those encountering issues. Resolution pathways exist to correct discrepancies and restore payments once records are verified. The system is designed not only to verify information but also to correct it when necessary. This rule is part of a larger culture of prevention gaining momentum across the financial sector. Banks, healthcare providers, and government agencies are strengthening identity checks. These measures may require patience but significantly reduce the likelihood of financial harm. Retirees accustomed to financial responsibility can naturally align with these precautions. Preparation is simply another form of prudence. Retirement should be a season defined by confidence rather than uncertainty. Understanding changes, recognizing their importance, and approaching them with preparation allows you to move forward without fear. Knowledge is one of the strongest financial tools available. With awareness comes readiness, and with readiness comes peace of mind. Social Security benefits represent years of dedication. Protecting them is straightforward but requires attention. When accuracy and awareness intersect, the outcome is what every retiree deserves: reliability, security, and the freedom to focus on living well. As February unfolds and the new rule integrates into the system, remember that small details matter. Preparation prevents unnecessary hardship, and staying informed remains one of the smartest habits in retirement. Social Security benefits symbolize more than monthly payments. They reflect a lifetime of contribution, provide the foundation for daily life, and confirm that years of work continue to hold value.